Big pop in the markets on Friday. I'm D7 at GrokTrade, the owner of GrokTrade. Been trading in live markets using technical analysis for 30 years and an institutional trader. Big move. I'm going to start with the daily charts of the S&P 500, the spider, and I'm going to do a line chart. The only reason I'm doing a line chart is because it really shows the picture much better. If I go to a candlestick chart, it looks a little choppy. It's hard to really understand what's going on here. I'm going to a line chart just to make it simpler, easier for everybody to see. And you'll notice we have two trend lines going up. So we are in an uptrend. We have a higher swing high, higher swing low. We are heading higher, and we did break above this upper trend line. Very good to see happen. We have resistance coming in with this major swing coming across. I think we'll see that at 377 range, 378 on the spider. Let's go here to the diamonds. We're up. We are good long as we can stay above this trend line. So watch this trend line, guys. This trend line is very important. We're coming to the falling 50-day moving average. That falling 50-day moving average could, in fact, act as resistance. We got above it here last time, and then it comes crashing back down. So be watching that. This could be an area that people want to sell into this. Okay, again, daily on the diamonds. Daily on the Qs. We're going higher. I'm very much interested in this lower trend line. Stay bullish if we can stay above this. However, we have a major trend line coming down. We're right there at it at resistance. Be looking at these moving averages. Excuse me. As long as we can stay above these moving averages, that's going to bode very well for the stock market. However, we're coming into the apex of a triangle, a pinching pattern here. Let's see what it does here. Again, this is the Qs daily. If you look at the Russell's 2000, IWM, if you look at this, we have this big trend line coming down. We did break above it just slightly. If you look at this, I could also drop another line going from here to there. I like to snap these. I'm using TradingView. There's a link down below. And if you look at this, and it is an affiliate link, but if you look at this, we broke above. That's telling me that small caps it's telling me it's wanting to break higher. As long as it stays above these moving averages, that'd be really good. You can see my moving averages I use over here to the left. If you go to the XLF, this is the banks, the biggest ETF on banks that's out there. It's on the NASDAQ, but this gives you a good idea of what's going on here. We have what looks to be an ascending triangle. It's a flat top with an ascending bottom. We're at resistance on this level. This thing could hit and then break through, and then it has this trend line to break through and the 50-day moving average. So it has to get up above all of those, and then this one. However, if we hit our head there and we drop back down and then break this lower trend line, watch the lower trend lines, guys, on the dailies. If we break those levels, that's going to be bad news. You're not going to want to be long if that were to happen. If you look here at gold, gold had a nice breakout of the falling wedge. We have a W. Look at this. Down, up, W for winter, W for wow, W for wonderful. Really good chance, guys, that you're going to see gold go higher. What we have to see is the US dollar go lower, and I'm going to build a pretty good case on that here momentarily. If you look here at the silver, big symmetrical triangle, we're bouncing off of support, we're heading higher, caught up in the moving averages, and we have a lot of chop that we can get into. So let's watch this chop at this moment. US dollar was in this great uptrend. If you look at this, just a massive uptrend. And then we quit hitting these upper trend lines. So we hit resistance. We did not hit resistance. We chop around, and then we broke that major support line. So we have support, and then drop. If I bring candlesticks in, you'll see it again. Support, and then drop. Go back here. That's telling me that the US dollar now is broken. We should start trending lower. We go lower. If so, stocks should go higher, and commodities such as gold and silver should also go higher. VIX, if you look at this, VIX is in a big triangle, and we have a big support level, and we're below these moving averages. If we break down below this support level, that's going to bode really well for the stock market, because this is fear. Fear is dropping. If fear breaks that support level, fear will continue to drop and the market should go higher. Quick look at Bitcoin on the daily. Guys, volatility is so low on Bitcoin at this moment that it's the lowest it's been. It's actually lower volatility now on Bitcoin than both the S&P and the Nasdaq and the diamonds. Think about that. Volatility on Bitcoin is lower than the major indices today. Last time that has happened was 2 years ago in 2020. Very interesting. Now, while I'm here, I Ethereum, we're at a big trend line here. It needs to stay above this trend line. Let's see what happens. Come into an apex of a triangle. Look for a big move one direction or the other. This could be putting in a bottom here. Let's see if that actually happens. One thing I want to do is look at the weekly charts. If I look at the weekly charts, and we're doing the line chart again, this is a spider. We're down, down, down. We have this little W. We're heading higher, guys. We have the MACD crossover with a huge histogram tick to the upside. RSI is going up. Everything's going up here. The problem is the price isn't going up. We have lower swing highs, lower swing lows. We're in a big time lower. We got a downtrend that's in the making here. And this downtrend, though, the one benefit it has is it did not come down here and hit this trend line. It stayed up, but it found this trend line. It's bouncing off the rising 200-week moving average, which is just a monster moving average. Finding major support there. It's going higher. If we break this trend line, look for this trend line to be broken too, and this thing could be in a lot of trouble. Even though it's bouncing higher, I'm not liking this. The only way that will help this is if these histograms keep ticking higher. That means the MACD line and the signal line must be going higher for that to happen. And the price is going to be the catalyst to make all that happen by going higher, hitting this trend line, the falling 20-week moving average, blasting through it, and then blasting through this trend line, showing a sizable move to the upside. I think the odds are way against this from happening. It can happen, but the odds are way against it. So there's a lot of overhead resistance that we're going to have to deal with. But here's a chance for buyers, the bulls, to take control and to have a chance at doing something amazing. And the question is, will they have the strength to do that? If you look at the diamonds, nice rally, down, 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 and up, up, up. I'm going to drop a fib here. I always have to go to a candlestick chart, go to extreme, draw it down to extreme. I just want to see where this rally is. The rally's past 38. The 50% Fibonacci is going to put us at a trend line. Do you guys see that? So there's the 50% coming across. There's the trend line. Do you guys see that? So remember this trend line. Remember this trend line. So let me let's go to a line chart. And we have the falling 20-day moving average and the 50% Fibonacci and a major trend line all happening right there. This is the weekly chart on the diamonds. Big area, big chance for resistance to happen and to drop and to commence or to continue this downtrend in the markets. NASDAQ, these are the Qs. If you look at the Qs, we're down, 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 bouncing off of support. We're barely above. We're kind of at this 200-week moving average. That's big red here. And bad news, we're below all major moving averages for the most part. And we're just in this downtrend, lower swing highs, lower swing lows. The question is, will the bulls come rallying in? Because after all, we do have a big positive tick on the histogram, and it's curling higher on the MACD, and the RSI is ticking higher. This is the chance for the bulls to come in. But man, it's just dangerous ground to be thinking you're going to buy here. Russell's 2000, if you look at this same thing, we got major trend line, all major moving averages acting as resistance. We got a positive tick on the histogram. We got a crossover here on the MACD, and the RSI is going higher. But you know, I think this rally is going to be short-lived. Financials, it's bouncing off the 200-week moving average. We're getting caught up in these moving averages with a ton of overhead resistance. Gold weekly, double bottom in the making, maybe. Let's see if we can go higher. Bullish divergence on the MACD. This could turn into a falling wedge, and it could break up to the upside. The only way it's going to happen if you get the U.S. dollar crashing lower, and it's set to do so, guys. Silver, same thing. Big triangle, big pinch. Moving averages coming in. Look for a big move on the weekly chart on silver. US dollar, up, 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 up. We're at a major resistance area, and we have the RSI at extreme overbought levels with a bearish divergence. So it's telling me this is a time to be looking to short the US dollar because it looks like it's going to start going lower, but I don't know how long it will. I think it has a good chance of just coming back to the support line or the rising 20-week moving average. Let's see if that happens. The VIX. If you look at the VIX, we hit our head at major resistance. It's dropping now. That's good. If this VIX goes all the way down to this lower support level, guys, look for the markets to have a nice rally going into the future. Bitcoin is a whole lot of nothing. Let's just see what it does. This could potentially be a buy area for Bitcoin and Ethereum. Let's just see if it proves out to be that way. I'd like to see a nice confirmation with big volume to the upside before I start buying any more crypto at these levels. I'm hoping for better prices, but we don't know. But the last thing I want to end on is this. If you go over here to the monthly chart, I'm going to do candlesticks here. If you have this big rally up, 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 a bear pullback, it's kind of almost a flag type formation, finding support at the 50% Fibonacci. Again, monthly chart. Every bar is 1 month. This is on the spiders. If you look at this, we're also at the rising. Look at this. This is the rising 50-day moving average coming up, and it's finding support at it. Last time it found support at it, it found support at it. Okay, you guys see this? This is the 50-month moving average. Near support there. Found support there, found resistance at that same line. It has support here, resistance there. Do you guys see it? I want you to see how, and look how it caught up on the 50-day moving average. Found support and then got below it. Okay, I'm building a case here on the monthly moving average, the 50 monthly. The 50 monthly is right here. It is a great place for buyers to come in, look for buyers to happen. We don't have a crossover yet. We do not have a positive histogram, but it could happen any time. We do not have a bullish divergence yet on the MACD. What I do have on the, or I'm sorry, the RSI is we are way oversold now. This would be a buy territory. We're at a rising 50-month moving average, and we're at the 50% Fibonacci retracement. Guys, on the large time frame, this is a buy area. This is a buy area just to start putting time in. The problem, though, guys, is the economy. This is one of these economies that, I can't believe, anyway, that people are still saying that this is not a recession, that we could be going into a recession. Are you guys kidding me? Anyway, let me just keep going here. If you look at the diamonds, it broke below a trend line. It's back right now at it. If it closes below this trend line, that's going to be bad news. If it closes above it for this month of October, a very good news. Look for more upside opportunity closing out the year. NASDAQ. If you look at this, down, 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 just below the 50% Fibonacci, like a hammer type formation, but we're below this trend line. If we go bullish the remainder of October, closing above that, this has a good chance of continuing higher closing out the year. If you look at the Russell's 2000 monthly chart, we're down right at the 50% Fibonacci. We need to get above the 50-month moving average, the red one here. And if it can do that, it closes out above this for the month, look for upside opportunity. Financials, we're finding support above the 50%, but the reason it didn't make it down there, it touched it. It did touch it. Whoops. Oh, man, I hate that. This thing has this little back button. Okay, there it is. You smash that back button and it'll redo whatever you messed up. But what I like here is it did go down and touch that 50%, but it rallied right back up. But we have a major line coming across, and it's finding support there, support the 50-month moving average. And, oh, we got the smallest of histogram ticks. That's a green tick to the upside. That means we got a crossover on the MACD. So this could be the start of buying on the monthly chart. Gold monthly is down, down, down at the 50%. Tweezer bottom, very good opportunity for this to rally higher. Way oversold on the RSI. A good potential buy area on the long term. Silver, same thing. Down, down, down. Positive tick on the histogram. Tick higher on the RSI. Problem is we started to bounce. That did so far for this month. it's red. It needs to turn out to be green so it becomes an up leg, right? We need to see that US dollar monthly chart is up, 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 tweezer top, doji, look for that to drop. Big time reversal pattern there. VIX broke up above resistance and now coming back down. This is far more bearish than it is bullish as long as we stay above that trend line. If that happens, then what needs to happen is this needs to close lower. The markets need to go higher to close out the month. If so, this would be a death hook. Look for fear to bleed out and drop. That means the markets will be rocketing up. What I would be looking for, if the markets do in fact rocket up, I'm going to pause with this. I will be looking for shorting opportunities into that long-term strength. By no means is this the market bottom. Don't think that for a second. This is just an opportunity for buyers to come in and to rally higher. But the bears might be still too bearish or too powerful to get this rally to even commence. So that 50% drawback that we're seeing on all these monthly charts could end up being 75% drawbacks. Okay, to put that in perspective, the markets will have a sizable retraction even from where it's at right now. And so that's something we got to be watching for. And everybody's saying that we might go into a recession. I would think that you would agree that it feels like a recession already, right? Think about the GDPs. You know, how many GDPs do we have to have negative in a row for them to finally say it's a recession? I mean, it's insanity. But anyway, if you're a day trader or have the ability to day trade, you got to have over $25,000 in your trading account. And every trading room that I know of charges. We're one that does not charge. There's no charge for our trading room. It's at GrokTrade. You can find it there. If you go there, you got to register for it, get in there, and it's run by our Grok students. So our Grok graduates, the ones that have been through our 301, some of them 401s, it's run by them. And also one of our staffers is a moderator, and Mark the Meerkat. He's one of the very few people in the world that I would allow trade my money for me. He's a superstar. And if you want to go in and be, in with highly seasoned and highly trained traders, that's kind of it's a gift to have that opportunity to be part of that. But if you come in, you be a part, be committed to it, because if you just pop in and out from time to time, don't think you're going to learn anything. You're not going to get anywhere fast, okay? You go in there, make friends, get to know people, engage with these traders. They'll be calling out trades. Paper trade them for a while. Do not take those trades until you are comfortable and well educated yourself. Paper trade them a while. Paper trade and see if you would have made money or lost money. And get your footing, and you'll be off to the races. But anyway, it's a great little room, fun room for those that have the ability to be in the markets by, 9 a.m. Eastern Standard Time to about 11:30 Eastern Standard Time each morning. And if you have that ability, it's a great room to be in, especially, the cost is right? I mean, it's free, not too shabby. All we ask is you give us good reviews, and support us however you want to support us. So that is it, guys. Appreciate you all. If you like this level of trading education and information, feel free to subscribe. We'll catch up with you later. Bye.